So let's get started, folks. I want to thank David, you for obviously having me here today. It's always a pleasure to share my experience and knowledge here on the show. My goal for the next 50 minutes or so is to share with you a complete option strategy that you can use right away. It is one of the best performing strategies that my students are using right now, and my hope is that you will be able to use it to make money as well immediately. Just a quick logistics issue here that I'll probably take up the whole 50 minutes or so. If I miss your questions, I probably won't have time to take any questions at the end. You can send an email to my team at support@TradeOutLoud, and they will flag it for me to go in and reply to you directly. Okay, so that's what I can do for you in case I don't get to your questions. And so let's get going. So quick disclaimer here before we begin, this presentation is for education and entertainment only. It is not to be considered investment advice. Never trade with capital that you cannot afford to lose. So I want to start my presentation with something that is totally unrelated to trading, but I think you will find it very interesting. Okay, so it'll only take about 2 minutes or so. Are you guys okay with that? Great, fantastic, awesome. So what do these companies on the screen that you can see there have in common? What do they have in common? Now, I trust that everybody knows Amazon, so let's start with them. A while back, my wife and I wanted to buy Scrabble to play with our son. So I think it's a fantastic way for him to learn new words and spelling. So I went on Amazon and found this for 50 bucks. And with Prime, I can get it here same day in Toronto. Anyway, I scrolled down the page, and the first thing that I saw was the frequently bought together section, and it was showing me the official Scrabble players dictionary and the Uno card game. Now below that, I see games like Risk, Trivial Pursuit, and Cranium. Of course, you know, from my good old days, you know, all these are classics that I would love my son to learn how to play. Yep, that's right, I bought them all. Now you see the thousands and thousands of people who bought Scrabble from Amazon probably also bought Risk, Trivial Pursuit, and Cranium as well. So they know by showing me those games when I'm looking for Scrabble, there's a very good chance that I will buy some of those items as well. And they were absolutely right. Now, the bottom line is that Amazon studies customer buying behaviors, and they use this information to offer the right products to consumers at the right time. You know, it's kind of like when you buy a pair of shoes, leather shoes at the mall, you know, and the salesperson recommends the protectant spray, right? I'm sure you know what I'm talking about. Now, how about Uber? Here is a map of Manhattan. Now, Uber collects data from literally millions of rides. They know exactly where the rides get started. They know the most popular destinations, and they know how far each trip is. They know where you live, period. Now, in New York, you probably think that places like Times Square, Grand Central Station, or Wall Street would have the most Uber riders, right? Now, on average, each trip out of Times Square is about 3.9 miles. A trip out of Grand Central is about 4.2 miles, and from Wall Street, about 4.4 miles. But guess what? These three spots don't even make the top 10. Here are the top 10 Uber pickup spots in Manhattan. Penn Station, on average, 5.8 miles per trip. Columbus Circle, 6.1. Central Park Southeast, Avenue of America and 23rd, Lexington and 60th. 10th and 43rd, Lexington and 86, York and 72nd, Chelsea, and West Village on an average of 7.9 miles per taxi trip. So if I'm an Uber driver, guess where I'm hanging out, right? West Village, Chelsea, York Avenue and 72nd. The rides from those places are much longer and further, and I can make a lot more money. Isn't this data useful? Well, the point is that Uber and their drivers, they use real-time hard data to find customer and get them their rides quickly, right? And this gives them a huge advantage over the traditional competition. All right, so let's change gears a little bit here. I'm a big hockey fan, and my son plays a sport, so we talk a lot about hockey at home. Anyhow, this is Frederick Anderson, and he is the goalie for the Toronto Maple Leafs. Data accumulated over the years show that 14% of the goals he let in were from his blocker side, 21% on his glove side, and a whopping 36% went through his 5-hole. So of course, teams playing against the Leafs will study these numbers and guess where the players are going to shoot. That's right, between his legs. Now compare Anderson to Tuukka Rask of the Boston Bruins. Only 18% of his goals allowed went through his legs, 24% glove side and 28% blocker side. So if I am playing against Boston and Tuukka is in net, I'm shooting blocker side. In the NHL and actually all pro sports for that matter, teams always use hard data to get an edge, and this could well be the difference between winning and losing a game. Now, on a somewhat related note to hockey, this is a photo of me just before COVID at the Las Vegas Wynn Resort. That's my go-to hotel when we're in town, and hopefully this pandemic will be over soon and we can go there again safely, right? So anyway, behind me there is a sportsbook area. Now, I don't gamble often, but sometimes I do like to play for fun. So last weekend, the 2-6 Texans were playing the 5-3 Browns in Cleveland, and Vegas had the Browns by 4. So being the football expert that I am, I thought Cleveland is the better team this year and the Texans are horrible. So the Browns should win by at least 4 points, right? So I put down $100 on the Browns, and sure enough, the Browns won by just 3 points. And my $100 was gone just like that. Now, of course, I should have known better not to bet on the Browns. And after the game, my wife said I should stick with trading and leave football alone. And she was probably right. So obviously, sports betting is a big business in Vegas, and the bookies know exactly how to create their spreads to win. And these are just some of the variables that they use in their data mining. They use literally thousands of variations and simulations to create their spreads and money lines every single week. And it's no secret that Vegas has been using data mining in all sports to generate their highly accurate sports books for decades. And this is how they're able to consistently dominate the uninformed players like me, right? So back to the original question, what do these companies have in common? Well, the answer is they all use a lot of data to be accurate and to be fast. And whether it is to sell a widget on Amazon or to find Uber rides or where to shoot the puck or even spreading a football game, and it's not just these 4 companies, basically, all great companies today are doing the same using data. So by now you might be wondering, what does all this have to do with trading? Well, it is clear that businesses, organizations, and even sports teams are successful because they analyze data and use it to their advantage. And trading is no different. Yet in today's data-driven world, over 92% of retail traders still shoot from the hip and don't use any hard data to get an edge when they make trading decisions. Instead, they make decisions from their gut, or they get tips from watching TV and so forth. There's no proper research whatsoever for those folks. So here's what we're going to be doing here today. I want to share with you a simple data mining technique to find exactly when stocks are most likely to move up or down and how much they are likely to move. Wouldn't that help our trading? I'll then show you how I 14x my return trading this information with options instead of buying the stock shares. I'll show you a case study of that as well. So let's dive right in. Now, first, let's talk about how we can perform data mining to find high probability stock moves, all right? So what you see here is the end result of the data mining exercise for Activision, symbol ATVI. So we are going to be reverse engineering the process from here to see how we can get to this point and how we can find this information. Let me explain. Between February 19th and May 10th, this stock has been bullish 20 of the past 22 years. This means if you bought the stock on Feb 19th and sold them on May 10th, you would have made money 20 of the past 22 years. So that's 91% accurate. All right, so not only that, your average return during this period would have been 9.19% each year. So that's 9% in a couple of months. Now realize that most stocks don't go up 9% in a year. And if you use options to trade this information, your return can improve to 100% or higher. And we'll talk about that a little later when we look at a trade together. So here is the detailed data for each of the past 22 years. It's free data that you can download from websites like Yahoo Finance or some of the trading platforms out there. I'll show you where to find this information on Yahoo in a few minutes, okay? So again, that's 91% win rate by simply following a schedule. I call these profit schedules, okay? So are you writing this one down? Because you can use this information again in February, which is only a couple months away. You know that repeat every year option on your phone, right? Plug that in there and use that to remind you, all right? So we're not doing anything fancy here, folks. We're just following the data. And if you're a more visual person, here are the charts that correspond to this profit schedule starting in 1999. So the arrow represents the duration of the profit schedule from February 19th through May the 10th. 1999 was a winner. 2000 was a loser with the tech crash. 01 was a big winner. Winner in 02. 03 was a winner. 04 was a winner. Small loss in 2005. 06 was a winner. 07 was a big winner. Another winner in 08. Strong move up in 2009. Stock peaked early in 10, still a winner at the end. Winner in 2011. 12 was a winner. 2013 was a winner. 14 was a winner. 15 was a big winner. 2016 was a strong winner as well. 17 was a big winner. 18 was a small winner. 2019 was a winner as well. And this year, it was a winner as well, even in the midst of this COVID mess. Okay, back from February through May, right in the middle of when we started this COVID pandemic. Okay, here's another visual of the data. You can see that Activision has been a winner every year, actually, since 2006 during this specific period. But I wanted to bring you back further to show you that there will be losing years and it's not perfect, all right? So that's 20 out of 22 years, or about 91% win rate during precisely the same period every single year. So make sure you write this one down so you can take a look at it on February the 19th, this coming year, 2021, okay? It's one of the best ones I have, and you can use it again shortly. So how did I figure this out? Now, most of you here have met me in the past, either in person at my live events or online. But for those of you whom I haven't had the pleasure to meet, I'll keep this obligatory intro very, very short, okay? So I live in Toronto, Canada, with my wife and son. I've been trading for about 18 years now, futures, currencies, options. And to give you an idea, most of my trades last anywhere from a few days to a few months. So a much longer time frame than what Sean was talking about just before me. So as a chartered market technician, or CMT, my primary trading method is technical analysis. Now, the reason I prefer technicals is because it allows me to find repetitive patterns that I can quantify into rules. So every time I see the same pattern, I just execute the trade based on my rule-based strategy. So think along the lines of, you know, if I see A, then I do B, right? So I keep it simple that way. So when I see a stock like Activision that moves up, you know, 20 of the past 22 years, and back then 15 of the past 17 years, you know, a few years ago, it's clearly a pattern. For me personally, because this approach is based on hard data, there is no hesitation, there's no emotions, there's no analysis paralysis. You know, I just follow the rules. I try to keep my trading as simple as possible. And over the years, I've taught many traders how to do the same. And being a rule-based trader myself, you know, I don't really need to be sitting in front of my screen all day long. I wait for a setup and I put on the trade. I love to travel and spend time with my family, and the way I trade basically allows me to get on with my life and other interests very easily as well. But enough about me, let's keep moving, all right? So now that you know what a profit schedule is, let me show you where to find them, right? So first, you want to go to yahoo.com. You don't have to write this down, you just have to follow. It's very common sense, okay, I promise. Yahoo.com, and you want to click on the Finance tab, right? Then at the top of the page, you want to type in a symbol that you want to find the profit schedule for, okay? So in this case, let's put in Procter & Gamble, symbol PG, which is one of my favorite stocks to trade. Then click the tab that says Historical Data. Then simply put in a date range for the data that you want to get. So I want to go all the way back to 1999 here through 2019. So you want a good 20 years of data to look at and see if we can find a pattern in there, okay? So simply click on the download button. And what happens is, if you do that, is a spreadsheet will automatically gets downloaded onto your computer. So this is what you will see on the spreadsheet when you open the file. There are several columns on there. The only two columns that you need are, number one, the date column, and number two, the adjusted close price. Okay, I want the adjusted price because that includes the stock splits and reverse splits, and they adjust for that. You can delete all the other columns because we don't need them. Okay, so after that, what you want to do is pivot. If you use Excel, you can use the pivot option to adjust the close price to line up by the year across the top. So you have the date along the side on the y-axis, okay, and then the year across the top, and the price, the adjusted price is in the middle. That's the actual data that we want to see. Okay. So the numbers are a bit hard to see on the screen, but as you comb through the spreadsheet manually, it is clear that over the past 21 years, from July 29th to October the 8th, P&G is very bullish. Okay, now I must warn you that this process is very simple, right? But it's a very tedious process as well. Of course, it'll be much faster to do this with an automated script like I do. That said, I want you to learn how to do this manually just a couple of times. You don't have to do it, every single day. Just try it a couple of times so you have a full understanding of the logic behind this approach. It's like my son is learning, multiplication in school right now, right? There's no way I'm letting him touch any calculator until he understands how that works, how to do it in his head, right? So it's the same for anything that we're trying to have a full understanding here, okay? All right, so let's move to this results here. So after this fun exercise, we end up with this. So from July 29th through October the 8th, P&G has been bullish 19 of the past 21 years, and that's 90% of the time. And basically anything over 80% is actually great to trade with, okay? So during this period, from July to October, P&G on average moves up 4.83%. Now I want you to write down this 4.83 number, or just remember it, 4.83, okay? It's actually a great number for a slow moving blue chip stock like P&G. Now, of course, like I said before, we can turn this 4.83% move into a 100% trade, okay? So having this data changes the way we look at P&G, right? So we now have the edge of knowing the dates when this stock has the highest chance of moving up each year. So make sure you write this down as well, July 29th, October 8th for P&G, because you can use it again next year, okay? So of course, there's nothing wrong with buying the stock and making that 4.83% average each year, but I promised you earlier that I'll show you how to use options to trade this profit schedule. So let's do that now. I want you to look at the red square. I want to show you how I put on an options trade on July 29, 2019 with my students, okay? So let's do that now, step by step, using options. So here's the options chain for P&G on July 29, 2019, the exact day when the bullish schedule begins. Now the stock was trading near 115, where the red arrow is pointing, and we used a bull call spread to trade this move. So here's what it looks like. We bought the 115 calls for $3.73 each and sold the 120 calls at $1.51 each, and we did 40 spreads in this case, okay? And here you can see with the red oval and the orange boxes what the spread looks like in that chain. Now, at the top right-hand side of the screen, you see that we used the October 18th monthly expiration, which is about 84 days from the current time. Now, remember the schedule runs from July 29th through October the 8th. So the October 18th expiration works well with it. It doesn't have to be exact. As long as it's close enough and liquid enough, that's a good expiration, okay? Now, here you see in the red box at the top that the total cost for this trade is $8,880 for 40 spreads, okay? If you are just starting out, you can do one spread for $222. How did I get 222? Notice in the green box that we bought the 115 call for 373 each, and we sold the 120 call for 151 each. So the net is simply 222. Note that 222 is also the maximum risk for this trade. Then as you get more comfortable with the approach, you can scale up to 2 contracts, 4 contracts, 8 contracts, and so on. Okay. In the smaller red box, you can see that the maximum possible return is about 125% or $11,120 for 40 spreads. And that can be achieved if Procter & Gamble moves up to $120 or above by expiration on October the 18th. The yellow arrow is where the stock is at the beginning of the trade, and the green arrow represents the up move that I'm expecting for the stock. Okay, so note that the horizontal line represents 120. So 120 represents the red line there. Now, this is very important. Remember the data that the stock on average moves up 4.83%, the number that I asked you to write down. Here, I need the stock to move up $5.27 to get to 120, which is 4.6%. So the stock typically moves up on average 4.83%, and this spread requires a move of 4.6% to get to my maximum profit. You want these two numbers to jive. Okay, makes sense? All right, so let's fast forward to October the 8th, which is the end of the profit schedule. The stock is now trading at 122.84, where the blue horizontal line is up about 7% since July 29th. So now, if I bought the shares with $8,800, that would have been about 77 shares, and I would have made $624 in profit, which is pretty good. Using a bull cost spread with $8,800 in capital, the position made $9,400 of profit, or 105% ROI. So this is the power of leveraging with options, and that's over 14x difference between buying the shares and using the options. Okay, so now this was for last year. I didn't get a chance to update my slide for this presentation, but we did the exact same trade this year with my students back in July, and it was a winner as well. I believe the spread made about 120% this year. Okay, so let's look at another stock schedule. You must be wondering by now, does this also work for stocks going down? Also, right? So let's take a look. So here's one. Make sure to write this down so you can use it again in the future. Now, between July 16th and September the 6th, CREE, symbol CREE, traded down 9 of the past 10 years. So that's 90% simply on average. The stock drops 6.21% during this 51-day period. Okay. Here's the data. Again, this stock goes down every year during the same time, not up. Okay. So remember, 9 out of 10 years in the market, that has been super bullish over the past decade. So when I see a schedule where the stock trades counter trend a lot, I pay attention. So this data is up to 2019, and we did exactly the same trade this year as well. So let's look at how we used options to trade this profit schedule just back in July. Okay. So here's the options chain for CREE back on July the 16th, 2020, just a few months ago when the bearish schedule began. The stock was trading at 66.28 at the time of the where the red arrow is pointing. We first bought 20 contracts of the 67.5 puts at $6.75 each, and we sold 20 contracts of the 62.5 puts at $4.65 each. That creates a bear put spread for us. So see at the top right corner that we use the September 18th monthly expiration. Remember, the schedule finishes on September the 6th, so the monthly September 18th timeframe works very well for us. Here you can see in the larger red box that the total cost for this trade is $4,200 for 20 spreads. If you're just starting out, you can buy one spread for 210. All right, that's as low as it goes. Note that 210 is also the maximum risk for this trade. Again, as you get more comfy with it, you can go up to 2 spreads, 4, 8, 16, etc., etc. Okay, in the smaller red box, you can see that the maximum possible return is about 138%, or about $5,800 in this case for 20 spreads, and that can be achieved if CRE drops down to 62.5 or lower by expiration on September the 18th. Okay, so the yellow arrow is where the stock is at right now. Okay, and the green arrow represents the down move that I am expecting for the stock. So note that the red horizontal line also represents my target at 62.5, which is a 5.7% move from the current price. So remember, on average, this stock drops 6.21% each year, 6.21. I want it to drop 5.7 this year, okay? And if you can do that, then I can make a profit of 138%. So do you see the alignment here? So it doesn't matter what kind of options you trade. When we structure an options trade, I want to make sure that the stock doesn't need to work too hard to double my money. Now, let me repeat that. When structuring an options trade, I make sure the stock doesn't need to work too hard to double my money. And looking at this type of risk graph, it can tell us the whole story of whether this trade can easily work, or does the stock have to really labor, for us to have a good return. Okay. All right, so let's fast forward to September the 6th, which is the end of the schedule. Look at the green arrow. The stock is now trading at 58.06, down about $8.22, about 12% actually since July 16th. If I shorted the stock with $4,200, that would have been about 63 shares, and the trade made about $518 of profit, which is pretty darn good, assuming I can even borrow the share to short to begin with. Using a put spread with $4,200 in capital, the position made $4,400 or 105%. Now, shorting the stock yielded 12.3%. Using options made 105%. And that's about 8 times difference between the two methods. Okay, so you see the advantage, right, of combining these schedules with options. You now probably know something that 99% of other traders don't know out there. I just gave you 3 high probability stock moves for Activision, for PNG, and for CRE, all with win rates of about 90% or higher. All right, you want to see a couple more? Great, fantastic. So before I explain how you can make these trades with me every single week, here is a recap of the 5 steps that you need to follow in order to do this yourself, okay? So be sure to jot these down. Step 1, you want to download the free data for your favorite stocks on finance websites such as Yahoo, or your trading platform would have that too, depending on which one you use. Once you have the data in the spreadsheet, you need to pivot the years to find the bullish and the bearish patterns. Again, do that manually a couple of times, and then you can move on and writing a script to do that automatically on your computer. Okay. Step number 3, you want to use the correct option strategy to trade these profit schedules. Okay. So if it is a bullish situation and a volatility is low, you can use a long call or a bull call spread. If it's a bullish situation and IV is high, you can use a bull put credit spread. Bearish and low volatility, long put or bear put spread. And last but not least, bearish and high volatility, bear call credit spread would be a great choice to look at. Okay, so then you want to pick an expiration date, simply that corresponds to the scheduled date. And step 5, you want to enter and exit the trade based on the profit schedule timing and make money. That's it. Now, if you feel that this trading approach works for you and you want to skip steps 1 to 4 and go straight to step 5 and make money, I want to help you do that. I'm going to give you the best profit schedules and options trade each week. So all you need to do is spend 5 minutes to put on these trades. So if you want to trade with me and would like my help doing this together, you can join my Profit Scheduler Club for Options. So let me tell you what the club is all about, okay? So my profit schedule club for options is based on two things. Number one, every week I do all the data analysis to give you the exact profit schedules for the stocks that are most likely to move up or down. And number two, I will also give you the best options trade for those specific profit schedules, and they all target 100% return or higher in a safe manner. Safe manner means we always use long options or spreads. We never trade naked options. Now, you're probably wondering, does this strategy work during a crisis such as the COVID-19 pandemic? Let's take a look. When you log into the members area, you see the most recent profit schedule published, as well as all the archives. They're all there for you, okay? So here is a bullish profit schedule for Illumina from March 22nd, right in the midst of this COVID-19 pandemic when the market was crashing. So click on that and you see the profit schedule. So here's the schedule for Illumina. Everything you need to know is on this downloadable document that you can keep for reuse the following year, okay? So zooming in at the top, you see that the stock is Illumina, and I sent this out in March to my students. You see that in the past 15 years, write this down, the stock has traded up 13 of those years between March 23rd and June 11th, a precise 81-day period. Right, so write this down so you can use it again in March. Now, for this particular trade, a bull call debit spread was the best strategy. And here you see the average up move for the stock during this time on the second line there is 12.67%, 12.67% on average. You also get the expiration date that you should use, the strike price, the cost of the trade, the potential ROI, and the exact entry date as well for this opportunity. In the middle, you will see all the exit scenarios and my comments about the setup and any of the nuances that you will need to know to make this trade work. Details such as how to deal with earnings and dividends would be all in this section here. Okay, and last but not least, this is the risk graph that you saw earlier. So we can track the stock price versus the P&L. And this bullish trade for Illumina ended up reaching the max profit of 106%, and my students took full profit right in the middle of the COVID-19 crisis. All right, so here's the bearish one that I sent out to my members in late February, so you can use this very soon. When the pandemic was just starting in North America, Weight Watchers, symbol WW. Click on it and you will see the complete schedule for the trade. Same idea here on this document. At the top, you saw that the stock is Weight Watchers. I sent this out in late February to my members. In the past 16 years, Weight Watchers has traded down 14 of those years between Feb 23rd and March 31st, which is about 36 days or so. So write this down so you can use it again in a couple of months in February, okay? So we used a bear put debit spread for this trade. And here you can see that the stock moves down on average 7.42% during the schedule. You see the expiration date, the strike price, the cost of the trade, the potential ROI of this trade at 106%, and the exact entry date as well. In the middle, you see my comments again, how to take profit, how to manage risk, and any other nuances that you may need to know to make this make this trade work. Okay, so I personally spend a lot of time on my preparation, so I know ahead of time exactly when to take profit and when to exit the trade. Okay, so here's a risk graph of Weight Watchers there. This is to me personally, this is the most important piece of information because it tells me everything I need to know about this trade. It's really all in this visual here. So for this profit schedule that was completed in April, the spread returned 106%, and my members took full advantage of that during the pandemic as well. Let's do one more. You can write this one down too. Here is another bullish profit schedule we did in March when the market was coming down very hard. But the data and the charts were both indicating for us to go long, right? And we did. So it's Apple. Click on that and you'll see the complete schedule and the trade. At the top, you see that the stock is Apple. I sent this out back on March 15th to my students. Over the past 17 years, Apple has traded up 15 of those years between March the 10th and May 27th. And that's exactly a 79-day period with an 88% win rate. Okay, so at the time, take yourself back to March. At the time, everyone was shorting the market and nobody gave this trade a chance. Okay, people were reading the news and focusing on how Apple had to stop iPhone manufacturing in China and how demand will suffer because of COVID. I actually got emails from many students asking, Matt, are we going to go long Apple here? What's going on? Anyway, for this trade, we used a bull put credit spread. And here you see the expiration date, the strike price, the credit for the trade, and so forth, and the ROI and the entry date as well. Same as the other two schedules I showed you earlier, you will also see my comments, profit target, risk management, and any of the nuances that you will need to make this work. Basically, every week's the same. I make things very, very consistent every single week so that there's no guessing when to get in or when to get out. It's all laid out for you, all right? So here's the risk graph of the trade so we can track the stock price versus the P&L. So while many stocks were crashing, Apple did follow the bullish profit schedule and traded up. So this trade ended up being at a maximum profit of 122%, and my students took full advantage of it. So the whole idea here is to keep everything simple. And as you just saw, this approach works under all market conditions, including the current pandemic. Now, before I talk about how you can join the Profit Scheduler Club for options, I need to make some things very, very clear. So the Profit Scheduler Club is not for those who are looking to get rich quick. Okay, this won't do that. As you saw, this is a data-driven, rule-based strategy designed to take advantage of exactly when stocks are most likely to move. This is not crypto, guys, okay? It's not for those who can't follow rules and who like to trade on the whim. These schedules are based on hard data. I didn't make them. It's based on hard data, and they are set in stone, right? So for those who can't follow rules and don't have the discipline, it's not for you, right? Not for day traders, obviously. You know, this is not day trading. A lot of these schedules last several weeks. So if you are a day trader who have a need to get in and out the same day, that's not for you, okay? It's not for paper traders as well. If you don't plan on doing real trades, this is not for you. This is an implementation program, so I do expect you to be prepared to execute the trades, all right? And last but not least, this is not for whiners. Now, we have regular Zoom coaching meetings, and my students want to have like-minded traders on the call, okay? So if you're the type who complain and make excuses, then this is not for you, okay? But if you are not any of the above, and the potential of making 100% return each week with me doing all the work makes sense to you, then this is a good fit, and here are some of the benefits that you'll get with the program. All right, so first, you will have access to an exclusive members area with my top 2 to 3 picks each week. So that's at least 104 profit schedules per year. And I said before, the great thing about this approach is that we can use a lot of the schedules over and over each year without necessarily reinventing the wheel, all right? So you also get the high probability options trade to go along with the schedules, and each of them I target 100% or higher. If I cannot construct a trade that can provide us 100% return, I won't do that, okay? Just like the ones I showed you earlier. Markets can turn on a dime. So as I showed you earlier with Weight Watchers, with Cree, right? You also get bullish and bearish setups to stay hedged at all times. Expect to always be trading both sides with me. That's a really important trading aspect that I provide. And I've been doing that a whole trading career myself, okay? Really important to be hedged and have a balanced portfolio. Also, the trades are very simple to execute, as you saw before, which means they work for small accounts, or they can be scaled up for large accounts. I have students who trade one contract, and I have some who are more advanced and they're doing 40 to 50. Okay, so it depends on where you are right now. You can start small and scale up. I give you the exact information, strike prices, expiration date, target, risk, and all the different scenarios and so forth for each trade. I keep my trading very simple, and the idea here is to do the same for you as well. And because this approach is very simple, that you can do that on pretty much most US and international brokerage firms. And for me, and I'm assuming for you as well, the ultimate goal is to save time and to profit from these repetitive patterns so we can all build wealth and enjoy life, okay? So we talked earlier about who should not be trading with me. So now let's take a look at who has been successful trading these profit schedules, okay? So traders with a busy full-time career, but you want to manage your own portfolio, but you don't have the time to necessarily go through the steep learning curve, this is good for you. New options traders who need some help finding and structuring their trades, this is done for you every week. So it's great for busy traders who want to build up their retirement accounts and need a long-term growth strategy as well. That works very easily for them because the execution is simple. I have a lot of intermediate and advanced traders on the group, and these people typically are looking for a rule-based strategy to add to their arsenal. Okay, so some of my students use this as a standalone strategy. They use it to combine with what they're already trading as well. And some of them actually use the profit schedule as a bullish and bearish indicator. All right, and finally, which is the bulk of my student body, a lot of my members are part-time traders who have a limited time to find trades, and this works great for them because I'm the one doing all the So the retail price to join the profit schedule account for options over at my website, TradeOutLoud is just $2,997 per year. It is a substantial investment, right? So, however, you can recoup this investment easily with just a few trades, and you get new setups every week for the entire year, which I would have to imagine you would think that at this price, it is exceedingly fair, but I'm not going to stop here, all right? For today's Friendsgiving attendees who are committed to learning and improving your trading, I'm going to include the following bonuses to help you out, okay? So bonus number one, you get my annual profit scheduler publication that contains my favorite 52 bullish profit schedules. Now that's one for each week from January through December. You can trade them straight up with stocks, or you can use options as well, okay? So this is normally reserved for my mentoring clients only. That said, I think you will benefit tremendously from this, and I decided to include this with your membership. Oh, one more thing, you will get the newest edition of the annual profit scheduler and future updates as well. Now remember, this is in addition to the 2 to 3 options trades that you will receive from me each week. Bonus number 2, you get unlimited VIP support. You will have questions along your trading journey, I guarantee you that. So when you become a student, I will give you a special email address. Simply send your questions in there or call in and say you are a Profit Schedule Club member, and my team will make sure you jump to the top of our priority line, okay? So if it is an admin question, my team will take care of that. If it is a trading question, they will flag it for me immediately. All right, bonus number 3, you also get my live bi-weekly coaching calls, right? I want to make sure that you succeed, make sure that you're doing things right. So on these calls, the purpose is for my students to ask me questions. We dive deep into trades. We look for trades and enter trades together. I'll share the same trading insights that I'm sharing in my private mentorship program that costs over $30,000 a year. This is how I personally help you get to that next level. It's on these coaching calls, okay? So here's a quick recap for you. When you join today, you'll immediately be enrolled as a member, where you will get 2 to 3 weekly profit schedule picks directly from me. Along with the schedule, you will also get the options trade targeting 100% ROI or higher. You get both bullish and bearish setups to stay hedged. You have immediate access to all the archives. You can download them and you can use them going forward. With the options trades, they include all the entry and exit details with the exact strike prices and expiration dates. I'm also including the 3 bonuses for you as a new member. The coaching call, the live coaching call, is by far my favorite, and it is dedicated time for me to mentor you there, okay? So these coaching sessions are also recorded as well, so you can watch them at a later time if you cannot make it there live that day. So the total value of what I'm presenting to you here is $2,997 per year. Even at this price, it is worth the investment. Just look at how well you can scale up your trades and build up your capital. But I also know that some of you are newer to options and don't have a big trading account yet. So here's what I'm going to do for you in this presentation today. If you're willing to invest in yourself, I am willing to invest in you. It's very simple for me here. I've had this rule my entire life, and for the last 8 years that I've been a mentor, you're not going to pay $2,997 per year. For this presentation only, I have created 10 gold memberships, and these 10 gold members will only pay $14.97 for not one, but 2 full years of membership. I want to make this affordable for 10 of you who are ready to get started today. If you do the math, that's 50% off the regular price, and you get double the time trading with me for 2 full years, right? So the link for you to register now is certustrading.com/Thanksgiving10. In addition to the 2 full year gold membership that you can take advantage of right now, I want to make this a completely safe decision for you without any risk whatsoever. So your satisfaction is 100% guaranteed. You joining the club will come with a 30-day money-back guarantee, which means you have absolutely nothing to risk at all when you join today. If you don't think this is the simplest and most effective way to building wealth trading options, or for any reason you're not 100% satisfied, just email us at support@certustrading.com, and I will buy back your membership and you will get a full refund. So there's literally no way you can lose here. So all you have to do right now is go to certustrading.com/Thanksgiving10 to register for one of the 10 spots available at this special price today. When you do that, a fully secured checkout form will pop up in the new window. Simply fill out the form and hit submit, and your username and password will be sent to you in the next few minutes or so by email, and you will start trading with me right away. If you do change your mind for any reason at any point over the next 30 days, you have my guarantee to back you up. So I finished my presentation. I hope it was helpful, and I was able to give you some new trading ideas, some new techniques, and some new ways of thinking. For those of you joining the club, I look forward to seeing you at our next coaching call, which is next Friday, December the 4th. Okay, it looks like I've been going on about 50 minutes or so. David, I'm done. Passing the mic back to you. Have a great Thanksgiving, everyone in the US. Have a great night, and I'll see you guys again. Take care.